borrow against them, and that creates money. So what I wanted to show you was if we even had a small percentage of, let's say, just that market on chain, and they wanted to borrow against it, what that would do is push up the price. Today we're talking about HBAR, how Hedera is doing what XDC is doing, how oil is now tokenized on Hedera, the green coin, the carbon negative, and my Hedera adoption simulator, how a real world asset can be tokenized as collateral to create money. Stay tuned. So Hedera is HBAR. And as you know on this channel, we've been talking about XDC, but real world assets are just a way for these banks to create money. And what do I mean by creating money? That you can borrow against. So HBAR and XDC are very similar in the way that they facilitate the network. It also is ISO compliant. So if you can take a real world asset and tokenize it, you then can represent money and then borrow against it. They have their full asset lifecycle on chain. And so the name of the game right now is pretty much bring all of these assets on the chain for collateral. And you say, Joshua, what's the point of that? Well, the point of that is for money. And if you can borrow against the coin or borrow against your asset, in my opinion, it's going to push up the price. And so this is where, in my opinion, where we should be putting most of our focus on is with real world assets, because that's going to be the use case. But I think what we're going to see is more of a hybrid approach with a lot of these chains, because you'll see one bank saying, hey, we want HBAR, another bank saying we want XDC. And really the name of the game is to borrow against these assets on chain. And as I showed you in my last graphic, what are they borrowing against? Well, they're borrowing against real estate, funds, and securities. And really securities could be anything. We saw the first round of putting, tokenizing things with NFTs. The next round, as we go through the ISO 20022 compliance, banks are starting to adopt it. It goes to the central bank, trickles down, and we're kind of at the stage in the life cycle of taking real world assets and putting them on chain. So what does this mean for you? Well, if we can track where the money's flowing, I think we can get a good indication on where the liquidity is going to flow. And liquidity is just money. So Toceny is a company similar to a lot of the companies I showed you, but they're essentially just taking these assets and putting them on chain. And the name of the game is just for fundraising, which is a fancy word for creating money. So if they can put these green institutional tokenizations on the Hedera network, similar to how they did it with XDC, they can create money. And so let me break this down. Real world asset tokenization on the Hedera network, they're going to do it through the protocol ERC 3643. But what this means is the 0.003 kilowatt hour per transaction is really important, because people in the past have talked about how Bitcoin is like, energy, like the price of energy. And I don't know if that's kind of where they're going to put their focus on, with like where they're going to say this blockchain is better than the other blockchain because of the energy costs. But that is something that I'm going to pay attention to, because if we want a green effort of like an energy efficient, ISO compliant blockchain that we can tokenize assets on that's carbon negative, that might be a plus to the world's, basically these big banks. These big organizations might focus on the energy efficiency, but I don't know. We'll see where the money's flowing. But on a completely opposite approach, Hedera is working, at least what they enabled was oil on the HBAR blockchain. And they did it through a company called ZONIQX. I'm not going to try to pronounce that. But what that means is that's a huge market. If you guys don't know, basically the oil market you can trade, globally. And if you had a blockchain that's ISO compliant that everyone adopts for real world payments or cross-border payments, that might be beneficial. So you can track, hey, we got X amount of dollars coming from this area of the world, X amount of dollars. Everyone can track it. You could generate money on demand through this ISO compliant institution. And where they're doing it right now is ZONIQX. But in my opinion, the reason why they're working with these banks is because either A, they don't trust the DEXs right now, or they want the ability to just control their own assets. I mean, they like the idea of, I guess, the non-regulation of the cryptocurrency, but they also don't like the idea of everyone can see my assets on chain. And that's my opinion, but that's kind of what I'm seeing. It's like, what's the point of having all these organizations generating liquidity really what the name of the game is, they need these organizations with the fiat system. So you need these organizations to kind of bridge the gap. That's why you have these ZONIQX exchanges, and then you have the other one, Toceny. The banks need someone they can trust and they can get behind. But the benefit for these guys is if they can live on chain, they can, for example, attract a broader audience, a broader audience of investors. I mean, that's perfect. Here's why this is important for you. HBAR is basically tracking oil on chain. That means money is flowing on chain. And I have another graphic past this to kind of simulate what that would look like. The platform ZONIQX is facilitating the liquidity. One World Petroleum is the broker, and then HBAR is tracking all of the barrels, in my opinion. It's a security token, so that's kind of where we got back in the first part, where it's just basically securities are on chains, and basically investing is now global. And so I did talk about that, but here's kind of where I see the benefit. Everything's a little bit faster. There's less of a fee. And you're not part of that Swift system, but the kilowatt hour is very minimal. And it's even interesting that we even have to talk about this, because I personally might focus on this and put this part of my chart of like, hey, if the kilowatt hour is low versus Bitcoin or versus XDC, that might be a plus. So Joshua, why are you so focused on real world assets? Well, we got a lot of money in that. With 326 trillion in just real estate for the global market, 120 trillion in just commodities, 133 trillion in just bonds, 180 billion just aircraft, etc. So real world assets, you can tokenize them, borrow against them, and that creates money. So what I wanted to show you was if we even had a small percentage of, let's say, just that market on chain, and they wanted to borrow against it, what that would do is push up the price. And let's say we keep borrowing against that same one, it pushes up the price. And I'm using this as a simulation, so when people give you like a price prediction of what's happening, you got to watch where the money is being created. And that is the biggest, in my opinion, key with a lot of these coins is you're going to see these RWA transactions being pushed on chain. So let's say an exchange like the ZO exchange wants to buy it because they need the liquidity for their reserves. That pushes up the price even more. And I think that's kind of where you're going to see, because if people start seeing money being created, they're going to go, hey, I want on this. And then they can tokenize it, create money, and money gets created. So we're going to see a lot of these smaller exchanges pop up, and we're going to be tracking them. Create videos to show you at least where the liquidity is flowing. A lot of these exchanges don't give me access, or at least I can't find the contracts where they're putting these assets on chain. And I think that's just to protect the investors. I did a XDC simulator where pretty much they have their own private subnet. And I think that's kind of what they're doing. Even with like R3 Corda, they have their protection of like, because they don't want all that information out in the real world of like who's buying what. But what we can do is track where the exchanges are going and where the RWA, the assets are flowing. Because there might be a spot where real estate, might be one player and like HBAR takes over, or XDC just does aircrafts. I just really love talking about this, and I want to hear from you, and I'll see you in the next video.